Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Protect and Grow with Chicagoland certified financial planner Tim Stearns of TJ Stearns Incorporated. Trust, respect, and results. TJ Stearns Incorporated focuses on comprehensive financial planning and benefits.
And welcome into the program. This is Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, president and founder of TJ Stearns, Inc., a financial, wealth, investment, and retirement planning firm. They are here as your resource, Chicagoland, for questions and answers and to uncomplicate the financial world. If you would like to interact, if you would like to talk with a CFP, if you would like to get your Protect and Grow written retirement income plan put together, give Tim Stearns CFP a call, 800-640-2256. That's 800-640-2256. And Tim, always a pleasure. We appreciate you being here on the program.
Hey, Peter, it's good to be here with you. A lot of good topics today, so let's get into it.
Absolutely. Well, Tim, on the program, you've given us a wealth of information about our wealth, but we don't just offer financial products or strategies. You offer a resource, somebody to help people through the decisions that we face and make with our money, an ongoing perspective of the financial world from an experienced, qualified professional. And I think that that is so important. In essence, we are looking for trust. We are looking for communication. We are looking for good information and education on our money. So give us a little bit more of kind of your background and perspective on the financial world. What are some of the things that sort of shape the way that you have discussions and help individuals formulate their plans?
Well, I can tell you, it comes from the home front, and that is, my mom and dad were big savers, but they were lucky enough to have pensions and that type of thing. Then you go on to my family, and all my siblings are baby boomers, and none of them have pensions. So they have a very big dilemma. People are living longer and longer. And I hear this around the, Christmas table, the dining room table, in the last 15 years. A big concern to them is running out of money. What they have in their 401ks is kind of what they have for life after they're done working, right? So this is a reason that, kind of my passion is to get people through a 30 plus year ideal retirement and how that looks and how it behaves, especially with the market being volatile and that type of thing. That just puts more angst into baby boomers out there. And I know most of the calls we're getting nowadays and the people that we're meeting with, they say, I don't know what to do. I did it on my own through my different do-it-yourselfer, Vanguards, Fidelity, whatever. And then they see the market taking its bumps and bruises and they're scared. So I would tell anyone who out there that is worried about whether they're going to be able to have an ideal retirement, give us a call and we'll sit down and go over exactly what their circumstances are and see if we can get a great solution that would make them sleep better at night.
Tim, we seem to have more to worry about these days. It seems more complicated. You mentioned the 30-plus year retirement. Not only is retirement significantly longer than it was a generation or two ago, but we're doing it without the income source of a pension, which used to be one of the foundational pieces to support us in retirement.
Right. So, one of the things we do in our retirement classes is we show people, a stool. It has a pension, Social Security, and savings. And I say to them, what do you do? What happens to the stool if you take out the pension, and the person falls over, right? So how do we shore that up? And I think an income allocation plan is the only way to do that, to show them the wherewithal to get to that part. I have a lot of people who have been calling the show who are unhappy with their jobs, I was going to retire when I was 60 something, and now I just want to retire now. Is it possible? Is it doable? I haven't really put pen to paper. I don't know how to even start, and I would tell anybody out there, don't procrastinate. If you're not, work because you want to, not because you have to. And I think an income allocation plan totally helps with that.
And if that's the perspective and outlook that you would like to have, then pick up the phone and give a call to TJ Stearns Inc. and Tim Stearns CFP, 800-640-2256. That's 800-640-2256. He does offer for radio show listeners, for podcast listeners and viewers, the opportunity for an initial conversation and a complimentary review, evaluation, analysis, and consultation, a strategy session, and to put together that Protect and Grow written retirement income plan. No cost or obligation. This is for your well-being and financial peace of mind, ladies and gentlemen. Pick up the phone, give a call, get that perspective and guidance and assistance from an experienced, qualified professional. Tim Stearns, CFP, is here for you as a resource. 800-640-2256. That's 800-640-2256. Tim, you mentioned income allocation. Is that the Protect and Grow written retirement income plan? And how is that different than what most people may already be doing?
Well, 1 out of 10 Americans have a written income plan. So that's a telling tale right there, is that a lot of people don't have one. I don't know if they know where to start, where to finish, that type of thing. So we are trying to help get the word out there that is going to make you feel better about your retirement plan. So at the end of the day, what does it look like? We take in all the money that's coming into the house, whether that be Social Security or the retirement funds, and then show what the money that's going out. So cash inflow, cash outflow. And at the end of the day, we solve for what that magical amount is that these people want to live on. A lot of people haven't put pen to paper. The other thing I found is that if they've had anything done like this from other companies, usually it's just projections. And the projections are pretty strong. Assuming 7-8% in the market for the next X amount of years without any downside, that's not realistic. Number one. Number two, we talked about this through April of 2022. The 2000 through 2022, you had the S&P 500 average less than 5%, right? And that's during a 13-year bull market. So we have to be cognizant of the fact that projections are just that. When you're doing an income allocation plan, we work with knowing that you're going to be okay. And the knowledge is done by using sophisticated products that will get that done. We sometimes use an annuity. We have other products as well. But at the end of the day, how are you going to make sure that you'll be able to pay your bills the next month when you quit your job?
Tim, you said projections are strong. By that, you mean maybe optimistic or unrealistic when you give those numbers of what the real world actual past performance is of the S&P. That's a long cry and a far shot off from what we have traditionally been told our expectations could or should be.
Well, when I got in the industry over 27 years ago, the whole talk was, you could assume 10% in the stock market. Well, that's definitely fallen down because, the 2000 to 2022, we've had some ups and downs. You have 2000 through 2002 when the market went down about 50%. You have 2007 through the early part of 2009 through there where it lost another 50%. You had COVID in there, which a lot of people scared the heck out of a lot of people. A lot of people went to cash. So, if you don't have active money management, I don't know how you're going to get through the type of markets that we have nowadays. And I think that makes a big difference.
Well, again, if you would like to take a look at your planning projections, your plan for your financial future, if you would like to structure that written retirement Protect and Grow income plan, pick up the phone and give a call to Tim Stearns CFP, 800-640-2256. That's 800-640-2256. Tim, if our projections for our financial future assume a hypothetical straight line linear positive rate of return, or assume and project out a 8% rate of return or a 10% rate of return, and then those things don't happen in reality, we're not where we expected to be. We could be well off of where our expectations and projections told us we could expect to be.
Well, those little percentages, from 10 to 8 down to, 5% are going to make a difference as to what your cash pile is worth, your portfolio. You add in there, a couple of years where the market doesn't perform and you might have issues, when you're projecting out that you're going to be always positive. One of the things we kind of get a laugh at in our retirement classes, which again, we're holding in September, at Roosevelt University in Schaumburg. So anyone who wants to Zoom that or wants to give us a call, we can get them signed up for it. I would insist on them coming to it. It's an excellent class. They can learn a lot of takeaways. But what we talk about in there, as I say, your projections are 8%. Did you ever have a market just do 8% year after year? And it gets a laugh because that's not possible. The market does worse, it does better, but the average isn't 8% nowadays. That's just, we call that your grandfather's stock market that ended in about 2000, where the market just kept on climbing. It's going to come back soon, right? That's what we keep hearing. So the other thing I'm finding is that, a lot of people, I feel like they're not educated. Their advisors out there aren't really educating them. They have their portfolio supposedly being managed, right? But they haven't talked about Social Security, Medicare, all the things that go in. What's baked into a retirement is not being addressed, in my opinion. Well, the people that come to us are very scared and ignorant to what's out there. And so they're afraid of the unknown. And that's what we try to help them uncover, what exactly they need for the retirement.
Don't have all of the pieces to the puzzle. No. It's no slight to any individual, but we haven't received that information or been told we need to dive in and try to educate ourselves on many of those very important topics. I mean, topics that will literally determine our outcome and our financial future have sort of been ignored in the financial world, Tim.
Well, for example, I met with a couple the other day on Friday, and they were talking about, he was going to take Social Security early. The heck with it. It's my money. I want to go grab it. Well, when we ran a social,
with everything we hear about Social Security, we have all probably heard that perspective from time to time.
Exactly. But when I ran the Social Security optimization report, they were leaving a lot of money on the table by going early because they had the wherewithal to stave off turning that on right away. So, there's a lot of things that, like I say, that are baked into it. And I think, at some point, the other story I'm hearing is, I don't want to worry about this anymore. I was trying to do it myself. It's kind of gotten away from me, especially with the last 6 months in the market. Mm-hmm. I'm ready to give up the reins so I can go enjoy retirement, but I want to make sure I have a plan. And, 1 out of 10 Americans don't have a plan. So help us get there. We can do that for you.
Well, again, if you would like to get that plan, that Protect and Grow proprietary written retirement income plan that you can only find there at TJ Stearns Inc., designed with the help and assistance of a certified financial planning professional, Tim CFP, pick up the phone, give a call, 800-640-2256. That's 800-640-2256, 800-640-2256. Tim, you've mentioned market risk. You've mentioned some of the tools and strategies that can help savers and investors mitigate that. You've mentioned the written retirement income plan that many individuals and couples don't have, the vast majority of the public, even those making the transition in the midst of it. You mentioned Social Security. What other services do you provide? What other areas in the planning process does TJ Stearns Inc. and Tim Stearns CFP help us to focus on so that we don't have to worry so much about it?
Well, one of the very powerful tools that we have here is to be able to run a tax report showing that people, if they keep all their money in qualified accounts, 401ks, IRAs, and that type of thing, what that will do to them and their family eventually, as far as what the total tax bill is. That's an excellent report to show people why the rhyme and reason between why you'd want to start to do some Roth conversions, maybe, especially with, 2025, the Trump tax laws will be resetting back to their old. So right now might be an opportunity, especially if you have people who are currently retired. Why not? What the tax bill is now. I don't know what the future is going to look like tax wise. So why not do that? I'm not talking about taking off huge chunks of money to do conversions, but right now is a great opportunity to be doing that the next couple of years.
Tim, is this a money saving opportunity that we really need to focus on and recognize? And then is this the type of thing that you can universally apply, or do we really need to examine that on a case-by-case basis?
This is how I look at it. Nothing ventured, nothing gained, right? So it's a great way to actually look at and see what your full tax bill is. Most people don't know what it is out there. And the software takes into effect what the taxes would be on you. Then when you take the money out and maybe you don't use it, you put it back in a vehicle, what the taxes would be there. And then the last part of the puzzle is what the taxes would look like for your family when you're gone. And that's another reason to take a look at it, see what the total tax bill is. With these Roth conversions, there's some real power in there to let money, run. If you're in the early 60s, why wouldn't you do that? So you can build a Roth type situation that will go, most men say will live to be about 85 and a female 88, according to Social Security Administration. So if I have 20, 25 years of tax-free growth to leave my family, that's a pretty good opportunity for everybody. And, if I need it, I can pull down on it and it won't affect what I pay for Medicare, or, there won't be taxes on that money. It's a win-win.
Tim, my aunt actually worked on the James Webb Telescope. And if you talk to her, we've all seen these amazing pictures of outer space, but if you talk to her, she can tell you intricate details that nobody else knows about the James Webb Telescope and how it works and functions and what it does. My son, if you ask him about Pokemon, like I know nothing about Pokemon, he can tell you the characters and what they do. He can tell you all about the details of Pokemon. That is their area of focus and expertise.
Yeah.
That's what they do. And for many people, focusing on these details that you talk about of the financial world it's simply not what they do. And we've been trained kind of not to think about it. Set your 401k up and it will happen automatically. It's out of sight, out of mind. Defer paying taxes. You can worry about that. Like, we have been trained not to pay attention to the man behind the curtain and certain details and aspects of our financial progress. But that is what you do. That's your James Webb Telescope or your Pokemon. That is really what you are into day to day. So when you talk about things like tax rates are expiring and taxes will be going up in 2026, when you talk about things like the Secure Act and the effect that has had on the laws regarding and the requirements with our IRAs and retirement dollars, these are things that you can help people dive into, get a better understanding, because it's not Pokemon we're talking about here. These issues literally do determine our financial future.
Right. Everyone's got their, area of expertise. What I have found, though, with a 13-year bull market that basically just ended at the end of 2021, you had a lot of people out there who thought they were smarter than the markets, and everyone was making money hand over fist. And I'm very happy for people. But at some point, the reality has to come home that maybe you should give it over to an expert, a certified financial planner, someone who teaches classes on retirement, and you can learn and then make sure that you're in a better shape for if something happened, God forbid, to you, that your spouse wouldn't be, in a quandary looking for answers. Yeah. So having a plan will do that.
It's a little easier in a rising market to be a financial genius. The problem is that markets are not always rising. We are facing a little bit more challenging market right now. And certainly over the course of what is on average getting close to or surpassing a 30-year retirement time span, we will face a few additional challenging markets over those decades, ladies and gentlemen. So you got to have that plan in place. And that's why Tim Stern, CFP, stresses the information and the importance of formulating that plan here on Protect and Grow Chicagoland Retirement each week. And if you would like your proprietary Protect and Grow written retirement income plan, only available there at TJ Stearns Inc., with the help and assistance and the planning guidance of Tim Stern, CFP, pick up the phone, give a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, you put a lot of emphasis on education, and you put a lot of resources out there for us to become better educated. The book, Income Allocation, that you offer, the planning process, the weekly radio show where you address these difficult topics, the classes that you hold and host, the ability to have individual reviews and consultations to address questions and concerns. What do you aspire to in providing that information to the public, and how do you feel that is a resource to you and to them?
Well, our whole goal here is to get people to the finish line. And the finish line is a successful retirement, and how do you get there? Well, there's a lot of things that are part and parcel of that. So we make sure that people understand exactly how we're doing it. My wife is a teacher, and I think that lends itself to being married to her for 26 years, that I want to make sure that our clients understand what we're doing, the rhyme and reason behind it. Our biggest advocates are our clients, because we've taught them, yes, you can retire. You're going to work because you want to, if you want to stick around there. Your portfolio had way too much risk. We've triggered that back. We've given you some stop loss type vehicles that, instead of mutual funds that you were in prior to that. We showed them the 59.5 loophole, that if you're working for a company out there, you can easily take out your money and move it into an IRA that would be self-directed, or you can, let a financial advisor help you with it. But it opens your whole world to other products out there that might be safer than the current rank and file mutual funds that they have. So our big thing here is education, and then, from there, having a successful retirement.
Again, things that many of us simply have not been told, do not know about certain opportunities, strategies that are available, that 59.5, that in-service distribution. It's not just the first time that you can withdraw money from your 401k or IRA. It is a time that even if you don't need it, you can begin to better control it and position it for the future purpose of taking withdrawals and income from those dollars, even if you are still working, actively employed, and want to continue to contribute and capture the match on your 401k. This is a important strategic opportunity. If you're 59.5 or beyond, you can begin to take control of your assets. Maybe the funds inside the 401k are not the best, most optimal fund choices for positioning those dollars for your retirement purposes. That's why companies allow the 59.5 in-service distribution, because they don't want to be liable for keeping your money captive in the short-term period right before retirement, when maybe different choices and options are more appropriate. If you'd like to find out about how to do that, honestly, Tim, probably not a hard process, but one that you don't want to make any mistakes with. You want to cross all the T's, dot all the I's, do everything the right way so that you don't have any unintended consequences.
Well, measure twice, cut once, right? So, you make sure, when we do an income allocation plan for people, it's not one and done, you tweak it, and it's dynamic, because a lot of people, will say, hey, I want to work 5 more years, and something happens at work, or I want to work only 2 more years and they want to stay longer, et cetera. These are all dynamic plans. I had a brother that got let go, but prior to when he thought he was going to retire. And, we moved the timeline up to make sure that he had enough money. These are things that happen. Life happens to people, and we change with it, if we need to. But the basis and the foundation of it is an income allocation plan with great financial vehicles in there that will carry the day.
Once again, if you would like the help and assistance of a certified financial planning professional, Tim Stearns, CFP, is your resource, Chicagoland. The Protect and Grow proprietary written retirement income plan available to you, no cost, no obligation. It starts with a conversation, a review, an analysis, looking at your current investments, holdings, positions, retirement accounts, and making sure that you have addressed things like how to maximize, optimize, and incorporate Social Security. What is appropriate risk? What is your tolerance, and how much are you exposing yourself to in your investments? How much risk are you taking? How much are you paying in fees? And how to generate that income and minimize taxes along the way. It's not what you make, it's what you keep. It's not what you have, it's what you get to keep from it. And taxes are usually the largest line item and expense standing in the way. There are strategies to minimize that. So pick up the phone, give a call, 800-640-2256. That's 800-640-2256. 800-640-2256. Tim, you made a comment once that has stuck with me. Being efficient with taxes is as effective as shooting for higher returns, but generally with far less risk.
And I still stand by that. At the end of the day, that's what gets you through retirement, right? Is by being efficient like that. You're actually getting a better return on your money when you convert things to Roths or there's other vehicles out there. So, I mean, a lot of people are in these funds that are losing right now, and they're very volatile. They thought the target date funds were going to be a catch-all and they'd be fine. Even those went down 15, 20% a couple months ago. So these are the reasons that we meet with people to kind of educate them to see if there's better things out there that would help them, get to a better retirement.
Tim, I'm going to put you on the spot, put you in the hot seat. A little siren sound effect here going. It's time. Rapid fire. If I could drill it down, put you on the spot, what would you say are some of the top signs that you look for that we do have a solid financial plan?
Well, I mean, I would start with that you have a handle on it. Not knowing what you have going on is not good, to bury your head in the sand and go, well, we hope for the best. So having a handle on it, when we just got some new clients from the radio show a couple of weeks ago, and she came in hat in hand with everything, a full disclosure, told us everything that was going on. Every time we needed something back from her, she got back to us the next day. And guess what? We built a great income allocation plan for her. So I think knowing what you have and knowing what you don't have are a big thing. The first part of planning is to get off your butt and get to see somebody, right? And make sure that you do have enough money, and then I'm a big believer in nothing ventured, nothing gained, turn over every rock to make sure that you're doing it right. Do we have all the answers here? We try to. And if we don't, we make sure our CPA gets involved or our estate attorney. We have a lot of arrows in the quiver, as they say. And I think that helps.
Well, once again, if you would like to formulate your plan, review and evaluate your plan, check up on it, or just confirm that everything is in place and you are in good shape, pick up the phone and give Tim Stearns, CFP, a call. The offer is you can have a conversation, ask a few quick questions. You can come in for a complimentary review evaluation, and Tim will help you formulate the Protect and Grow proprietary written retirement income plan. 800-640-2256. That's 800-640-2256. 800-640-2256. Failed to mention, and we would be remiss if we didn't, the book Income Allocation. We talked about it. Available to the first 10 callers to today's program. If you have at least $500,000 saved for your retirement in retirement accounts and investments, this book is essential for you to make the most and get the most out of each and every dollar. Pick up the phone right now. Give Tim Stearns a call. The first 10 callers will receive a copy of that book, Income Allocation. 800-640-2256. That's 800-640-2256. Tim, we always appreciate the time, the information, and education that you provide.
It was my pleasure, Pierre. Thanks for having me.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program on 890 WLS every Sunday at 11 a.m. and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Securities offered through TJ Stearns, a registered representative of Crown Capital Securities LP, member FINRA SIPC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.